Hello everyone and welcome to today's More Report Chart Analysis videos on Tuesday 20th of September with me, which is Pro-Market Analyst at Hand Tech Markets. We've got a relatively positive start, which is rather strange, I think, on the European markets. Basically because Wall Street was pretty much dead flat overnight. Asian markets were also dead flat. But you've got a very slightly positive mood in the European session. DAX is up, FTSE is up, CAC's up, and also the very slight sort of move away from the dollar. Now this is interesting because this is all coming just in front of the massively important meetings tomorrow, Bank of Japan and the Fed. Now, you'd imagine that traders will start to sort of just settle into this day and not really sort of take too much direction. But just for now, there is a very small amount of dollar weakness that's going. Although, just as I've been speaking, the market is just coming back a little bit once more. I think there's probably going to be a feature of today anyway. I think the dollar is not going to be selling off significantly in front of this Fed meeting in any way at all, because I think that the Fed could well come out tomorrow and sort of point towards December. I think that's the least of what the market is expecting. So that's could be seen. But I think the main sort of volatility factor could well come out of the Bank of Japan, actually, because the market really has no or very little consensus in terms of what the Bank of Japan could do. It might cut the deposit rate further. It may well have a switch of the quantitative easing package in terms of focusing on the shorter end duration bonds. In an attempt to steepen the yield curve, it could also improve on its or increase its ETF purchases. So there's lots it could do, but what it might do is also just remain a little bit cautious still, and not do too much ahead of the Fed, because the Fed is a few hours later, and the Fed could well also do some of the heavy lifting for the Bank of Japan. And if the Fed comes out hawkishly, then that would weaken the yen, which is exactly pretty much what the Bank of Japan needs. So it's difficult to know exactly what the central banks are going to do, but certainly ahead of the trading, you're likely to see caution taking hold. Now you have just seen sort of cable falling away again, having rallied yesterday, but the dollar yen is slightly lower, which would suggest yen strength at the expense of the dollar, and also the sort of commodity currencies are sort of relatively positive, although the Kiwi is quite strongly positive today. You've not really seen a great deal of movement on the Treasury yields, as probably to be expected really in front of the Fed, but the main thing is that the dollar has just slightly sort of slipped away in the early moves today. So what have we got else to look forward to today? Well, we've got the building permits and housing starts is the only real data that is on the agenda. Here we see today's calendar, and building permits there and housing starts. Again, basically nothing really doing in terms of direction to be got off those two. Still pretty strong on the building permits. 1.17 is the expectation, slightly back from the housing starts of last month, but again pretty strong. So those numbers are likely to still be dollar supportive, but yeah, other than that, not a great deal to look out for. Maybe the sort of API oil stocks could well give oil a bit of direction, but nothing really doing other than that. Now, my chart today is the DAX. Now, I said that the DAX has been sort of rallying today slightly, but you can see this this move in the last sort of week or so, week and a half, where the DAX has been sliding away. Now, it's completed this top pattern, this move below 40. Is it 42? 10,442, yeah, 10,442 is that neckline. It broke that. Now you can see today, if I sort of zoom in, you've actually rallied back towards that neckline, and the rally has failed and rolled back over again. So that is a neckline resistance near term, and that capped the gains on Friday, Thursday, and then also today. So that is clearly a resistance that the market is looking out for. Now this top pattern gives you a downside target implied of around about 360 ticks, which suggests around about 10,080. Now 10,092 is that reaction low from August, so that would suggest that we're probably coming back towards that. And the sort of price action in the last sort of week or so pretty much suggests that as well. 10,300 was hit sort of last week, but that was sort of broken on Friday. So I think this little rally that we've had is likely to be sold into, because you've got these momentum indicators which are now more correctively configured underneath the 50 line on the RSI, and certainly this hourly chart shows you this top pattern much better, and the resistance of 10,442, which again was around about a level of a reaction high early in August, but subsequently since then it certainly has been tested on several occasions and then dropped away again. So that is clearly a resistance market is looking out for. Now you've got a sort of a band of resistance, 10,442 up towards 10,507, which would be ideal selling opportunity. I think you've got these MACD lines which have unwound and now back towards neutral. RSI sort of back towards 60 on the hourly as well. So there has been possibly a little bit of more of a rally than I'd expected. Given the sort of failings around the 50 mark or mid 50s previously, but I still think this is a sell into strength, and I still think there is further downside that we're going to see on the DAX. So a retest of that low of 10,262 is likely to be seen, but subsequently back towards 10,080, which is the implied target of the downtrend, of the top pattern, but also 10,092, which was that August low. So I wish you good luck in your trading today on the DAX, and I'll speak to you later. Thank you.